Let's get more reaction from our business editor, because the cities have been very important this autumn statement, given the post-Brexit situation. So let's go back to Simon Jack.
Thanks very much, Andrew. Yes, we've been looking at markets and how they've been reacting to what they've heard. Of course, the big takeaway, I think, today is what the public finances are going to look like. We've got 90% debt as a percentage of GDP in 2017-18. That's the highest it's been for 50 years. That's what the OBR projected today. Now, this chart here tells us what the government has to pay to borrow money over 10 years, and it's gone from 1.36% this morning to 1.46%. So it's not an enormous move, but in fixed income terms, in bond terms, that's quite a big move. We also learnt that by the end of the period, we'll be very close to a total debt bill of £2 trillion. Well, let's get the thoughts of a couple of people to see what they took away from the autumn statement today. Christian May, the editor of City AM, which is a newspaper for the city here, and Carolyn Fairbairn, Director General of the CBI, the Employers Group. First of all, what jumped out at you from today's statement, Christian?
Thinking of our front page tomorrow, I think it has to be the underlying economic conditions that the Chancellor is now going to have to operate within. It seems to be a case now of increased debt, borrowing will be back, almost Keynesian some levels of huge pledges of investment in certain sectors, certain industries, lower growth, lower tax receipts and higher borrowing. So within that, it's perhaps not surprising that there weren't huge numbers of rabbits out of the hat in terms of specific policies, although there were a few, including some pretty cheeky tax rises. For example, we've had some rather angry insurance company bosses on the phone already about the particular tax rise from 10 to 12% in insurance premiums. So some tinkering around that, but pretty gloomy underlying economic conditions.
And also he said that obviously the target to eliminate the deficit by 2019 to 2020, that went out of the window some time ago. That was very unrealistic. The new target today, to try and balance the books sometime in the next Parliament or as soon as possible. Is that too vague?
Well, Osborne had his fiscal rules and failed to meet any of those. So Hammond's created several more, and we'll see if he manages to perform within those parameters. But the debt peak up to 90% of GDP is extraordinary. Hammond described it as eye-watering just over the weekend, and he's certainly going to deliver on that pledge. It is a pretty eye-watering situation. Those are the conditions he'll have to operate in.
It's getting more eye-watering. I think we can all agree on that. Carolyn Fairbairn, a big emphasis on the spending that he did announce today, big emphasis on infrastructure, productivity. What did you make of it?
Yes, I mean, no big rabbit out of hats, but a welcome down payment on the future productivity of the economy. So £23 billion fund focusing on particularly local infrastructure. I think that was something new. Local pinch points, local roads that will help unlock regional growth. £2 billion announced on Monday, part of that in R&D, not just development, not just research, but also the development of new ideas here in the UK. And of course, broadband, which has become something that businesses talk a lot about in terms of productivity.
Also, he said that it's sometimes unlocking the housing piece of this is difficult because of local infrastructure. You can't build there. We don't have the roads. We don't have the infrastructure to support new building. So there was a renewed focus on that. Did you hear enough there? Yes,
we were very pleased to see that, because there was this connection between housing and transport and the commitment to building new homes, but actually all types of different homes. And I think some of the emphasis that there's been on ownership has been replaced by a kind of recognition that there needs to be a range of different kinds of housing. So that was very good news.
I was struck by a couple of things I didn't hear. I didn't hear, keeping the capital allowances piece very higher for businesses, which is the tax-free amount they can invest in new plant, new machinery, new processes. He could have gone further?
Well, I think one of the things that we are struck by is, given we've got the downgrade for next year, which very close to the CBI forecast of 1.3%, that you are facing uncertainty, businesses are facing higher prices coming through, and there wasn't anything in there for the short-term investment picture. And so we do think that the Chancellor should keep a watching brief on that as these price rises and pressures come through in the early new year.
And no further cut to corporation tax. There was a little bit of chat that if we do want the lowest corporation tax in the world, and Mr. Trump in America does cut it to 15%, we could go lower even than the 17, which is the aspiration through this Parliament, to 15. Is it your experience that actually it's not corporation tax which is uppermost in most businesses' minds?
I have to say it is our experience. I think businesses will really welcome the fact that the business roadmap has been confirmed and the 17% has been confirmed. But we're not hearing huge calls for it to go lower. We are hearing for some of the investment allowances and some of these incentives to invest in the infrastructure challenges to be put higher up on the list than corporation tax.
And one other thing I heard Christian was saying, the triple lock is safe till 2020, but then we'll think again.
He claims that he might have to think again, or rather he hinted that the government will think again. But then given the enormous fiscal consolidation which they've penciled in, again...
That's code for cuts.
Cuts down the line, 2019, 2020. If they're seriously suggesting they're going to do that at the same time as telling pensioners we're coming for your perks, then I'm not sure anyone in government wants to go into an election, even if they're facing Jeremy Corbyn, with those kind of pledges. So we'll have to wait and see.
OK, Christian May from City AM and Carolyn Fairbairn, Director General of the CBI. As I say, government borrowing costs getting a little more expensive today as we look into a bleaker fiscal picture going forward. Pound pretty steady. The city was braced for pretty gloomy economic forecasts, and that's exactly what they got.